So I believe we were all put on this planet Earth to solve one specific problem. I believe everybody has a unique signature skill set that allows them to be individual, unique to this planet, and is supposed to help mankind. I think, and I really do think this, I am in my unique skill set. I believe I was meant to teach the masses about financial education. I believe my life has been leading up to this moment right here. Cryptocurrency is looking pretty bad right now as we speak. A lot of people are getting bearish. They don't really have evidence to back up this bull run. And I'm going to set the standard straight right now in this video. This is a crucial warning to everybody involved in the cryptocurrency space. And I need people to listen to what I have to say, because I believe I just found the answer. What's going on, everybody? Alex back with another video. Today we're going to be talking about a crucial warning. There could be a time where you panic sell or make the wrong move in the market. And now's the time for that to happen. A lot of smart money and big whales have been taking so much Satoshis from unsuspected victims or people that believe that the market is going to go to zero for some reason and that it's going to dump forever. So I have been put on this earth to help people achieve financial independence. And more importantly, I've helped people achieve freedom. So what I want to do is pitch this narrative called Altcoin season that could potentially happen right now in front of our eyes, while everybody's distracted and worried about their portfolio. I get it. You're probably not sleeping because you lost so much money. People have hodled their back. Some people even came into the market recently and they're down like 30%. They were told to buy an altcoin and they didn't understand the risks involved. And they're like max pain right now. I understand people's frustration. I see the views going down on everyone's channel. Not a lot of people are interested and want to look at their cryptocurrency portfolio because there's so much pain, right? So I'm going to set the tone straight, okay? I'm going to give you guys a little bit of comfort. And the way I find comfort is through due diligence. So diving deep into the numbers, into the math, into the narrative, into the psychology, into inflation, what's happening in other parts of the world. This gives me confidence and conviction in my decision to buy more altcoins. You guys know that not only have I gone all in with my whole entire trading portfolio, so when it comes to USD, I'm all in, but I've been leveraging up my portfolio so that I can get more percentage gains and buy the dip without actually buying the dip with new liquidity. So my nature, my actions, this research is all bullish for altcoins. And I'm telling you right now, don't miss this dip. It's much easier to buy the dips than to try to sell the highs. And I've made my fortune off of looking for the opportunity when everybody's panicking and freaking out and buying the dip, okay? Now, this is not always the answer, but I would say that after my research, I have came to the same conclusion. So let me show you guys exactly what I'm talking about. Now, I'm going to break the video down very, very specific so you actually understand, okay? It's going to be a lot of math and numbers involved, but I actually did it all for you so we can just come directly to the answer. I'm going to go into world currencies as well as world indexes and bring it from the top all the way down to the bottom and prove that altcoin season is right around the corner and things are happening right in front of our eyes. So if we come over here, I want to first define some terms so people understand what's going on. The first one is the US dollar currency index. This is basically an index or measure of the value of the United States dollar relative to a basket of foreign currencies, often referred to as a basket of U.S. trade partner currencies. The index goes up when the U.S. dollar gains strength and value when compared to other currencies. This is basically the U.S. dollar or the world reserve currency increasing in strength. So this is kind of a good world indicator to predict what people are doing with their money on a big scale. Let me define the second one, which is the S&P 500 index. So the S&P 500 index, or Standard & Poor's 500 index, is a market capitalization weighted index of 500 leading publicly traded companies in the United States. It is not an exact list of the top 500 US companies by market cap because there are other criteria to be included in the index. The index is regarded as one of the best gauges of large cap US equities Another common US stock market benchmark is the Dow Jones Industrial Average. So basically, this is another index to kind of predict where the money is going on a macro scale. And the last one I want to define here is the 10-year Treasury note. So basically, the 10-year Treasury note is a debt obligation issued by the United States government with a maturity of 10 years upon initial issuance. A 10-year Treasury note pays interest at a fixed rate once every 6 months and pays the face value to the holder at maturity. So basically, this is also another sign of where people are investing their money in the United States, which is relevant to the world because it's a world reserve currency. It's basically a debt obligation by the United States where they have to pay you this fixed interest over a time period. And usually when people buy like a 10-year Treasury note, it's showing signs that they have confidence in the United States and they want to get this interest. When people stop investing in it, it's because they feel like they can either one, make money somewhere else, like the stock market or other, commodities, or number two, they just don't have too much confidence in the United States government to actually be able to pay those yields. So I'm going to break this down in some charts and all of it's going to start to make sense. I just wanted to define those three things for you so you understand the context of what's happening here and so you can learn something. All right, so let's jump into some actual data. It gets very interesting if you look very deep at what's happening. Now, what I want to do here is break out 2 time horizons. And where I'm starting my research is at the US dollar currency index. Like we said before, the US dollar currency index shows strength in the United States government. And we have the other, which is US government bonds 10-year yield. Now, one thing to note about US government bonds and the 10-year yield, if it increases, as you can see here, it looks like it's doing good, but actually in the contrary, read it, US 10-year yield. So it's talking about the yield. If the yield's increasing, that means less people are investing in it. So it's actually a negative sign if this goes up. It's an inverse chart. So pay attention to that. Okay. So if we come over here, let's look at the first time horizon, and then I'm going to back up with as much evidence as possible in other financial industries like cryptocurrency or commodities. I'm going to show you what happened on all those other markets, and I'm going to draw conclusions from that. So you can see the first time horizon, the US dollar currency index dropped 12.94%, which is a significant amount. In the same time, people also lost faith in the government. It also increased 106%. That's a lot. Now that's an increase, meaning this is the yield. The yield increases, less people are investing in the 10-year bonds. So if we come over here, the Dow Jones Industrial Average actually increased 77.27%. That's a large increase, okay? And now if we look at gold, gold actually increased as well, up 30%. And that makes sense because the narrative has always been, especially around this time. Now the narrative switched, but it's always been, people invest in gold when they lose faith in, fiat currencies. And the biggest fiat currency is the United States. This is the world reserve currency. It's the biggest one. It's the last domino. So of course, people invested in gold and gold was up 30%. Okay, let's further back this up with more evidence. If we look at oil, which is a commodity, this is up 138%, which makes sense. People invest in commodities like Bitcoin and gold for the same reason as a hedge against monetary inflation. Now, if we look at Bitcoin, you can see that cryptocurrency clearly did the best. Bitcoin specifically is up 715%. So that's a large increase. Now, if we look at Ethereum, it gets even crazier. Ethereum is up 2,000%. 2,000%. So just to wrap up the first time horizon really quickly so you guys understand, when people lost faith in the United States dollar, and the starting point is the Black Swan event we always talk about. I don't want to say the name because I'm going to get shadow banned. Basically, you guys know what I'm saying. It's the whole issue with the mask that we have now, right? This event right there started this. People lost faith in the government, okay, because of inflation issues. And let me justify the fact that it dropped with, why people get scared of the United States when they start printing money, right? Around this time, they printed so much money and inflation was a big thing, right? People are freaked out about how much money they're printing and diluting United States dollars. So as you can see here, consumer inflation, official versus shadow stats. Now, shadow stats, I've showed it a couple of times, basically is alternative data. If you look at inflation with headlines in America, you're looking at the headline CPI. Now, right now, CPI is anywhere from 6.4% to 7.1%. But if we look at other ways that CPI has been calculated in the past, the 1980s model and the 1990s model, which, by the way, came from the SEC themselves, you can see inflation is much higher. In the 1990 model, inflation's at 10%. In the 1980s model, inflation's at 15%. So it's much more than we think, and this actually highlights it right here. So basically, we're looking at money supplies. There's 3 different types of money supplies. There's the M1, the M2, and the M3. To be honest with you, it's really irrelevant to explain the differences. So to save you time, you can just clearly see the dates. 2020, around the Black Swan event that we keep talking about, you can see inflation or the money supply increased by a lot in the M1, the M2, and the M3. So basically, they printed a whole bunch of money. And if we bring it back home for the first time horizon, which the specific dates is March 2020, all the way till the bottom here, which we've been talking about, which is May 31st, 2021. You can look it up for yourself. If you look at this first time horizon, it was catalyzed because people were scared. There was so much money being printed. Inflation was looking really, really scary. Now, that changed, obviously, because we have the narrative increase. We see the US dollar increasing. People are moving into the US dollar. How do we explain that second time horizon right here? Well, it's very simple. There's more inflation in other parts of the world. So believe it or not, other people's countries and other sides of the world have more economic turmoil than we do in the United States, of course, right? So they are going to feel the effects way worse. First, as you can see here, we're looking at top G20 currencies. You can see some of them are in double-digit, inflation territory. And I've showed you guys this chart multiple times. Countries with confirmed double-digit inflation. So although ours is saying, 6.4%, 7.1, they're in, 11.63, 21.1%. And that's what they're reporting. So it's probably way worse. And this is representing 1.1 billion people. So their inflation is much worse. And historically, what other countries and wealthy people in other countries have done is they will buy USD. Why? Because it's the world reserve currency. It's very simple. So they're feeling the effects in a very negative way, and they're fleeing to what? The United States dollar. This is where we get the bounce right here, okay? So now I'm gonna break down what happened in this bounce and bring it to all other markets. So since this day, May 31st, 2021, you can see that the US dollar currency index is up 7.32%. If we look at government bonds, they're down. So people are actually getting a little bit more confidence in the US government. It's down 9.28%. People are buying bonds. This is people from other sides of the world that have issues with their current inflation. Dow Jones Industrial Average is up 4%, okay? Gold is actually down. So this is where I, kind of drew this point here, the narrative kind of switched for gold just a little bit. It's down 6.47%, and Bitcoin is still up 30% with this bounce in the US dollar currency index. And if we look at Ethereum, we're up 52%. So Ethereum even increased by more percentages. Now, just to back that up a little bit more with the commodities, you can see that oil increased 5.48%. So it almost looks like people on the other side of the world are jumping into the United States dollar, right? And then people in the United States that understand what's going on are jumping into commodities. And I'm gonna back this up with even more evidence, okay? It gets really scary. So let me just summarize what we just talked about very briefly, because it can get confusing. So the first thing is when the DXY originally dropped those large percentages, people started investing in other things. They bought Bitcoin, they bought Ethereum, they bought gold, they bought oil, they bought stocks all over. They were investing everywhere. Why? Because they were scared of inflation and they were scared of diluting their savings. So they want to get some percentages, they want to invest, okay? But when the DXY actually increased and bounced off that trend line, people, for some reason, still invested with one specific case. They stopped investing in gold. Gold was down 6% and everything else increased. So people are still investing for some reason. Where are these people coming from? They're coming from, the United States and places that understand what's happening with United States inflation. But an interesting thing to note is that when the DXY moved down and up, crypto still benefited the most out of both moves. And just to note specifically, because I'm going to bring it back down to a very specific level, Ethereum, or the utility narrative that we have been always talking about, aka altcoin season, benefited even more than all of them, okay? So this is really important because this is kind of bringing home what I'm talking about. This is a huge warning right now. Your portfolio's down, things are happening, I get it. It can get really scary. But if you just hold on long enough and understand what's going on, you can see that investing in altcoins is literally the smartest decision right now on planet Earth as an investment option. And I proved it to you right in front of your face. And I'm going to back it up with even more because we know that there's two narratives. We have Bitcoin, okay, which is a hedge against monetary inflation. And we have the secondary narrative, which is, hey, take blockchain, which is the innovation of Bitcoin, and let's put it into every other social structure. Let me prove to you that the utility narrative lines up with price. It gets kind of crazy. I told you guys I was going to get very deep with my video process, and I'm not joking around. If we look at on-chain metrics, we can see the BTC e-liquid supply versus liquid supply. What that basically means is how much Bitcoin is being moved, right? If it's e-liquid, it's being stored. It's not liquid, right? Think of water, right? Water takes the shape of a cup. So if it's liquid, then it's moving, okay? So this is a very simple explanation. You guys can look into Glassnode Insights for more detail. They have full articles written about it, but I'm a cryptocurrency expert and I know what I'm doing here. So I'm just gonna explain it to you very simple. We have a trend of liquid supply dropping, meaning that people are not moving, they're storing more cryptocurrency. And then we have the inverse effect of the e-liquid supply. You see it's increasing with the price. And you guys know the biggest catalyst for Bitcoin and cryptocurrency is what? We talked about this in our last video about them wanting to stop a Bitcoin ETF. It's specifically because of supply and demand and scarcity. The scarcity element of Bitcoin basically drives it. Now, this is the same thing we're talking about hedge against monetary inflation, but let me show you the other narrative, which is utility. If we look at BTC new addresses, some things start to become a little bit weird, okay? Let's pull up May 31st. You guys know this date. Right before the May 31st date in 2021, you see May right here, 31st is right around this area. You can see big spikes in the utility narrative. This is Ethereum new addresses. People jumping on Ethereum, you see a huge spike, right? And then from that time, if we pull up active addresses, look at the date. May 31st is like right around here. We had a huge spike. There's only been a couple of times where Ethereum had more active addresses than Bitcoin, and one of them was right before the huge spike of active addresses. So it's like almost like people jumped on the Ethereum blockchain and then they started using it. And as you can see here, after they jumped on, Ethereum has been trending higher by active addresses than Bitcoin itself. This is crazy. Now, you see this big spike happening right now. You see there's a couple of times where it was abnormal. Let me zoom in for you. A couple of times. You can see it right here, kind of started it. We have an abnormal spike here. We have an abnormal spike here, right? We have an abnormal spike here. So this is like the most aggressive one we've seen in recent history besides this one. You can see it right there, right in front of your face. ETH is more active than Bitcoin right here. We have an active spike. So what does that mean? Maybe for the next couple of weeks, months, all those people are potentially going to be using Ethereum more than Bitcoin, which adds to my case, bringing it home for you guys. Ethereum is a leading indicator for other altcoins or the utility narrative. Once people start using Ethereum, they get tired of it because of the transaction fees and they start moving on to other blockchains and other altcoins. And if this is not the best video you've ever watched on altcoin season, then I have not done my job. If you could just do me a favor, like the video, share it, subscribe. If you're new here, because I think I just proved altcoin season on a level I've never proved it before. Not only just looking at the cryptocurrency markets, but also looking at the world, macroeconomics, and it all lines up to this next altcoin season. Honestly, I surprise myself sometimes. I appreciate you guys watching this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. I'm gonna leave it there. Mic drop. I don't have this mic doesn't drop. All right, guys. Catch you guys in the next video.